Hello accounting grade 10 learners and welcome to today's lesson. In this lesson guys, we'll be completing a full example of income statement. So it means now on your side, you definitely need to ensure that you'll watch this recording up until the end. So this question guys is actually from a past paper as you can see. So let's scroll down and check the question. All right. So as you can see, question 1, mostly for September question papers, it's always concepts and the statement of comprehensive income, the income statement. Question 2, the statement of financial position and notes. And then the last question is interpretation of financial information and internal control ratios, question number 3. All right. So please make sure that you will check my profile if you're on TikTok. If you're on YouTube, check other videos as well that I've posted where I complete the statement of financial position and also doing ratios from this question paper. All right, let's continue. Likewise, guys, before we can start, please make sure that you are going to please share my videos, please subscribe for more educational videos. That will help me on my site as well to create more content that will help you. All right, thank you. Let's proceed. So we have question 1, as you can see, question 1. That question is out of how many marks? 40 marks. Learners were given 36 minutes to complete the question. So we're not going to do 1.1, the match column. We are going to go to question number 1.2. 1.2, look at 1.2, guys. The total market is 35 marks. So the income statement from other question papers, it is sometimes out of 35, 40, even sometimes 50 marks. So you definitely need to ensure that you will master the income statement. So what are we given here? 1.2, Sebenza Traders. We have the following information that was taken from the records of Sebenza Traders on 28 February 2023, the last day of their financial year. So two things that we need to note here. The name of the business, Sebenza Traders. Their year end is on the 28th. So I want to throw the timeline, our accounting period, because most students, they also struggle with this. So on your side, at the end, your end is always given. It is 28th of Feb 2023. Now you want to know when did actually our accounting year start from this example, guys. It differs. So from this example, you need to ask yourself, what is the next day after the 28th of February? The next day. The next day will be the 1st. You go and write 1st March. Okay? You just need to ask yourself that. After that, 2023. What is the year before 2023? It is 2022. Then you have your accounting year. Let's repeat. You firstly ask yourself, what is the next day after your last day? For this example, what is the next day after the 28th of Feb? It will be March, 1st March. And then you need to ask yourself, yes, we have our year end 2023. What is the year before 2023? It is 2022. Then you have your accounting period. What else are we given? The business uses a markup of 40% on cost. So is what you need to note as well, that cost price is always equals to 100%. That is the cost price. And then what about the selling price? Selling price is cost plus the markup. So selling price for this example, it will be 140. So you will definitely need that information. So if the markup was 60, the selling price will be 160. If the markup was 80, the selling price will be 180. But cost price, it is always 100%. So what are we required, guys, to prepare the statement of comprehensive income, the income statement for the year ended 28 February? So let's go and check our information. All right, so we are also given the answer book, guys. Let me show you the answer book where we are going to write. So what I did was to add other values as well so that I can try and make this this recording short. So as you can see on the expenses, I did add some items there. You have water and electricity. I decided to add it there. Let me try to open this answer book again. Don't know what's happening. So I decided to add other items so that we can have a shorter recording. So let's start already. So what we have an extract from the trial balance for the year ended 28 Feb. We have the balance sheet accounts. So mostly on your side, guys, when you are doing the income statement, you are mostly going to use the nominal accounts. Okay, under nominal accounts, your first income is sales. Secondly, there we have a major expense, cost of sales. So nominal accounts, what do we record? Income and expenses. Okay, so your incomes will be on the credit side and then your expenses will be on the debit side under nominal accounts. So let's do this. So I already know that there is information that will affect our sales. Let's take that figure of 588,000 to our answer book. 5, let me reduce the pen there. All right, so we have an amount of 588. Maybe I should use color black. Maybe black would be more visible. Okay, let's change the color. Okay, so we have sales of 588,000. So what do you minus from sales? You are going to minus your debtors allowances. Your debtors allowances, these are your total returns. You minus debtors allowances of how much? 6,800. Do we have anything that will affect sales? For this example, no. But what affects sales, guys? It is when we sold more items, but maybe they were not recorded. Then you go and add on your sales. What else? If we have returns, additional returns, we have a customer who's returning goods, that will reduce sales and as well. And returns, remember, they also affect cost of sales, right? So for now, we are just going to minus then get an amount of 581,200. So after that, you're going to take your sales minus cost of sales. Then you will have a gross profit of 161,200. All right. So what else you record? You record your other operating incomes. Commission, it is already given. Rent income, guys, as you can see, we are going to have to calculate and make adjustments. So let's go and check adjustments. Okay, so if you can notice Roman figure number 5, we're told that the rent for 2 months has not yet been received. We haven't received rent for 2 months, right? The monthly rent increased by 10% from 1st September 2022. So you can even pause this video and watch and read that information carefully. So rent for 2 months has not yet been paid. All right, which means now we only received rent for 10 months, not 12. If they are saying rent for 2 months has not yet been received, what we have here, we actually have an accrued income that we're supposed to receive but not yet. So we have an accrued income. Here's what we need to do. As you can see, we are going to use this page to show the calculations of rent. So we received a rent from 1st of March up until when? The 31st of December. Okay, that is actually 2 months. But what about the other 2 months? That is actually 10 months. What about the other 2 months, guys? That will be your accrued income, the accrued income that we need to calculate. What else do you know? You know that rent was increased from the 1st of September by 10%. So on your side, you need to calculate from 1st of March up until the 1st of September is how many months? March, April, May, June, July, August, September. We are not going to calculate September. We'll end on August, right? So you're going to say you received rent for 6 months. Do you know the amount of rent you received? No. Okay, so you'll have 6x plus rent was received from rent was increased by 10% from when? 1st of September, October, November, December. For 4 months, your x, you know that x was increased by 10%, so you will add 10% X. Right, here's what you'll do is equals to the total amount of rent that we have, the 32,000 from the trial balance, guys, 32,240. All right, so you just need to solve for the unknown and get your rent. Okay, so you'll have 6x, 4 will multiply x there, you'll have 4x, and 4 will also multiply that 10% x. Okay, let me press my calculator as well. 10. Okay, so on my side I have 0, 4x equals to 32,240. Now we just need to solve for x. Okay, add all those like terms there. Then you will have 10, 4x is equals to 32,240. Then you divide by 10, 4 both sides. You divide by 10, 4. These two, they will cancel. X is equals to it will be 3,100. So your rent before increase, it is 3,000. Sorry, 3,100. So you're going to multiply here by 110. Why 110? Because your rent was increased by 10%, and then have your new rent after the 10% increase. Okay, so here's your monthly rent, 3,410. 3,410. We want accrued income for 2 months. You multiply by 2. You will have 6,820 as your accrued income. So you go and add that 6,820 to your rent. This is an accrued income, guys. Where do you record accrued income as well? On the statement of financial position under your current assets, accrued income. All right, so you add those two amounts and you should have a rent of 39,060. Okay, so I've actually posted a video on YouTube and also on TikTok where I explain or do more examples that involve rent. All right, so please check the description as well. I will attach the link where I explain rent income with other examples. All right, so we only have those two incomes for this example, only. All right, so you add those two amounts and then you'll have 49,210. All right, so your other incomes, guys, you sometimes have, yes, commission income, rent income. You'll have a trading surplus, trading stock surplus, right? So I will explain later on. And you will also record your bad debts recovered, and you also record profit on sale of your assets, right? So let's calculate gross operating income now. You are going to take your gross profit plus other operating income and have gross operating income of 210,410, right? So we move to our next item, other operating expenses. Yes, your main expense as a business, it will be your cost of sales, but now we have other operating expenses. As you can see, I decided to write all the other items as well so that I can save time. Stationery, salaries, and advertising, they've given you those three amounts, which means there's nothing on adjustment and additional information that will affect those three. All right, let's go and check our water and electricity. I want you to note the first bullet point, guys. The water and electricity account for February 2023 has not yet been paid, right? We haven't paid water and electricity. So we have an accrued expense, all right? You're going to take your water and electricity from the trial balance, 19,100. We add that 1,830. Why? This is an accrued expense. So we add 1,830 accrued expense. All right, so you press your calculator and you should get 20,930. Insurance. Let's check insurance, guys. Insurance. Where's insurance? Yeah. Insurance. Okay. So we have a Roman figure number 4. The insurance includes an annual premium of 3,360 for the period from the 1st of March 2022 to 31st August 2023. So we have a prepaid expense here, guys, because we have paid for months that are outside our accounting period. So here's what we need to do. So on your side, you are going to take the space where we're going to show insurance. I think I did note down. All right. So insurance, guys, we're only supposed to end on the 28th with our insurance, but we paid an annual premium from 1st September up until the 31st of August. So we want those months that are outside our counting period. So if you can count from the 1st of September up until 28 February, how many months do we have? September, October, November, December, January, Feb. It is 6 months. So we have a prepaid of 6 months as well. We paid for the next year, the other 6 months. So the other 6 months, guys, it is actually outside our accounting period. Therefore, we need to take it away. But on your side, you are going to take the total amount of that insurance, 3,960, 3,960, and then you divide by 12 and have your monthly insurance. Okay, so monthly it is 330. So you're going to multiply by 6. You are calculating your prepaid. Your prepaid insurance, it is 1,980. Your prepaid expense, you go and take your insurance from the list of balances. From the trial balance, here is insurance 12,500. You minus your prepaid. Okay, 12,500, you minus your prepaid of 1,980. Can press your calculator and then you should get an amount of 10,520. Packing material, let's check packing material. So all those amounts that I've populated first, guys, these are amounts from the trial balance. That 7,100 is from trial balance on packing material. Bad debts as well, 4,800 from the trial balance. Please don't be confused. Okay, as you can see, we're dealing with packing material, 7,100 from the trial balance. Let's go to Roman figure number 3. According to physical stock count, on 28 February, the following items were on hand. Packing material on hand of 1,950. So we're going to minus on hand. Why? Because we want only the packing material that we used. Minus 1,950. We are calculating used. We want used packing material. Should have 5,150. All right. So sometimes from the additional information, they will give you a used packing material. If they give you used, you take that used packing material and record it straight to the income statement. But if you have on hand, you minus the on hand so that you can get used. Let's check bad debts. Bad debts, guys, 4,800 from the trial balance, but we have the second last Roman figure, R item, a debtor who owed 1,200 to Sebenza Traders was declared insolvent. His estate was able to settle half of the amount owing, write off the outstanding balance. So we have someone who's owing us 1,200 in total, and now they can't pay anymore. But his estate managed to pay half of 1,200. So we only received 600 from the total amount that he was owing. But what about the balance? So you take 1,200, you minus 600, the balance is 600. They are saying write off the outstanding amount as bad debts. So you increase your bad debts by 600, right? And you should get an amount of 5,400. All right, donations, guys. Donations, also have donations. So let us check donations. So second bullet point, stock with a selling price of 2,520 was donated to a local orphanage. No entry was made. So we made donations with a selling price of 2,520. So here's what you need to do on your side. Let me just erase it there. Okay, so you're going to take that amount of 2,520. You want the cost price. Cost price, remember from the beginning I said the cost price, it is always 100%. You multiply by 100 and then you divide by 140. You have 140, the selling price. You multiply by what you want and divide by what you have. Okay, remember guys, I said at first, I did show you those calculations, how we calculated the cost price and the selling price. Right, so you can just press your calculator. So I'm getting a cost price of 1,800. So donations, they will also affect our value of our trading stock on the list of balances. So from your trading stock, you're going to take 44,000, you minus 1,800, and then you should have a new value of your trading stock. It's 44,000, the trading stock, guys. Add one more zero there. Okay, your new trading stock, it is how much? Let me just write there, 42,200. Your new trading stock, 42,200. Okay, so donations, they must be recorded as an expense at a cost. You record them at a cost, not the selling price. We have donations of 1,800. They are recorded at cost, guys, at cost. Okay, so let's scroll down. What else do we have? We have bank charges. Bank charges 4,200, and there's additional information where we're told that the bank statement for February 2023 reflected the following: EFT fees, credit card fees, and also interest on current account. Interest on current account, it will be recorded under interest income, and I will explain why later on. Okay, so let's add 170 EFT fees and credit card levies for 90 rand, increasing our bank charges. It is 170 plus 90. Okay, so please always show calculations, guys, to get part marks. then you should get an amount of 4,460. We have a trading stock deficit for this example, and I'll explain why. So if, guys, when you check the list of balances, when you check from the list of balances, can you see that from the list of balances we did calculate the new value of trading stock? It is how much? 42,200. 42,200. So I want you to check the additional information. So on Roman figure number 2, according to the physical stock count on 28 February, the following items were on hand. Can you see that on hand we have less trading stock? If we have less trading stock on hand compared to the trading stock on the list of balances, just know that we have a trading stock deficit. But if on hand is greater or bigger than the amount that you have from the list of balances, you will have a trading stock surplus, which you will record it where you have other operating incomes. Together with rent income and commission fees, you record trading stock surplus there. So on our side, we just need to find the difference, then record the trading stock surplus. So deficit, sorry, 42,200, you minus the 41,000, and then you should get a trading stock surplus of 1,200. All right, so those are our expenses for this example. Obviously you will have other expenses as well. Depreciation already given, guys, we don't need to calculate anything. So please add all items starting from salaries, you go to depreciation, add all those items together, your expenses, then you should get other operating expense of 139,855. So here's what you will do. You will take your gross operating income, 210,410, minus your other operating expenses, the total. And then, as you can see, we're almost done. So you should get operating profit of 70,555. And then you check now your interest income, guys, you need to show it separate. Why are we not recording interest income under other incomes? Because this is a significant figure. Materialistic items, if you can remember the materialistic principle from GAAP principles, we need to show interest income separate. Just like the interest expense, you show it separate, because investors, lenders, people who want to have access or to want to invest in your business, they want to see interest income and interest expense separate. Those are major items. All right, so let's check our interest income. Interest income, guys, interest on fixed deposit, you take that 1,620. And then we also have information that affects interest income here. Okay, so we are told that, let's start with the easy one, guys. Can you see that we have interest on current account of 220? You just go and add that amount. Get to one free mark there. 220 interest income, if it is interest on current account. And then now what are they saying? Provide for the outstanding interest on fixed deposit. Interest is not capitalized. Provide for the outstanding interest on fixed deposit. So here's what we need to do. Check your fixed deposit. Can you see the fixed deposit there of 24,000? Take that 24,000, you multiply by 9%. How many months? 12 over 12. They didn't say anything, so we'll just assume that it is for 12 months if they don't say anything, which means they're calculating interest for the entire year. So the interest for the entire year is 2,160. So here's what you need to do as well. You take that 2,160 minus 1,620, and then you should get your outstanding interest. Go and add the outstanding interest of 540. All right, so you can just add all those amounts, and then you should get 2,380. That is your interest income. So you take your operating profit plus interest income, then you have profit before interest expense. Profit before interest expense. Okay, so you should have 72,935. 935. Ish, my pen is giving me problems. So it's 935, guys. So please always verify with your calculator. Interest expense. Let's check interest expense. Okay, the loan statement received from SAA Bank on 28 February reflected the following balance: the opening balance repayment during the year, repayment that include the interest on loan, capitalized, and then you have the closing balance. So here's what I always like to do with interest. Just want to show you something. I always draw the T account of loan account, guys. It is a liability account. It increases on the credit side and decreases on the debit side. What happened now? Come on, I'm almost done. So here's what I always do with loan. Draw the loan account, just write loan. It increases on the credit side, decreases on the debit side. So we have the opening balance, guys. 1st March 150. So you need to ask yourself, what will increase loan? What will increase loan? It is the interest. Interest. Do we have the interest? No, it is the question mark. Repayments. They will decrease loan. 46,200, the repayments. And then you have the balance at the end of the year, which will be your balance carried down during your current financial year. It will be your CD, your balance carried down. Your balance carried down of 117,300, and then it will be your balance brought down the next year, but we're not interested in that. So here's what we need to do now. The amounts you have on the debit side, guys, I trust that you are also writing. So 46,200 plus 117,300, and then we are closing it off 163,500, close off as well 163,500. So here's what you do as well. Take that 163,500 and then you minus your opening balance of 150,000. You'd get interest of 13,500. Here's your interest expense. But now you need to show those calculations on the income statement. Here's what you will do. You take the debit side. You say you took the debit side of how much? Repayment of 46,000. 200 plus your closing balance of 117,300, you minus your closing balance of 150,000, and then you should have your interest of 13,500. Interest expense, you minus interest expense, show in brackets minus. So you are taking your profit before interest expense minus your interest expense, and then you will have, voila, profit for the year of 59,435. All right, thank you guys for watching. Please make sure that you like, you share, you subscribe, you repost my videos. That will help me as well on my side to create more content. Okay, so let's grow together. Thank you. Cheers. I'll see you on the next one.